When it comes to investing, our goal is to make money. We plan to hopefully invest a certain amount over a duration of time, and we look forward to that time in which we'll have enough to maybe retire and just do what we want to do with our lives and enjoy life. Now, here's the deal that I want to share with you. When it comes to investing, there are different reasons why they always talk about diversification or diversifying your investments, making sure you have different assets in your portfolio. Now, the reason why I'm bringing this to your attention is because there are different investments out there, and generally we often feel much more comfortable over one than the other. So for example, a lot of people would choose to maybe invest in real estate, and that's strictly all they choose to invest in, and that's okay. And some people would choose to invest in stocks and bonds, and that's all they stick with, while some people would choose, cryptocurrencies and the more volatile type of investment. Now, there isn't anything wrong, to be honest. They're all some form of investment, because hopefully they all can go up in value. They have the potential to go up in value. And I want to show you something here. And the reason why we're doing this comparison is just so that you can understand why it is important to maybe have a diversified approach in your investments, not just stick to one. So let's start with the first one. The first one I have is a comparison between the S&P 500 versus the Case-Shiller Home Price Index. And this would show us how the investments have done both in, say, the S&P 500 and the real estate market. This is what you have on your screen. The red line being the stock market, and the dark line, or the black one, being the Case-Shiller Home Price Index. And this just shows how the value of homes have performed over time. The value, your equity, all that has improved or increased over time. And this is over a 50-year period. And as you can see right now, from the time this has been tracked, okay, up until now, this S&P 500 is up about 4,099%, somewhere there, 4,199%. And the Case-Shiller Home Price Index is up around 1,288% from the time it's been tracked. I'm not sure if you guys can see that. But this is an interesting discussion, because people that maybe choose to invest in real estate, they would have made money. Of course, that's a lot of returns in 50 years. But at the same time, someone that has invested in the stock market must have, made so much more over people that invested in real estate. And this is where it's often quite just important to have different assets. For example, real estate, some stocks and bonds, and other ones. Now, let's do another comparison that I want to show you right here. And this is just comparing the S&P 500 again. And then we're going to look at some individual, maybe ETFs, which are generally recommended, like VTI, the Total Stock Market Index ETF. And we're going to include another one, which is a single stock company, say like Microsoft. You can choose Google, you can choose the other one, but just so that we can see what that looks like. And I will share my screen here. That's the S&P 500 itself. All right, we're looking at about 500 companies in the United States. Okay, and the yellow line being the blue line. Okay, the thick blue line is the S&P 500. The yellow one is the Vanguard Total Stock Market. Okay, so VTI. And then Microsoft being the lighter blue one is down below here. Now, if we change this to, let's say, 5 years, how have they all performed? As you can see, the total stock market has performed similarly to the S&P 500, which is the yellow and blue one at the bottom right here. And I mean, if you invested in there, in those, say, SPY, for example, SPY ETF, or the Vanguard Total Stock ETF, you would have made more than, say, 50% on your investment in just 5 years. I mean, this is according to these numbers anyway. So you'd have made close to slightly more than 50% there. And then if you look at it in comparison to the Microsoft stock, okay, you would have made almost 250% on your investment. And that is phenomenal. I mean, if you think about it, that's just amazing. If you really want to gain exposure to just your ability to make returns like this, you have to hopefully put your investments in different assets and invest in different assets, not just one. Now, like I said, if you've invested in BTI, you'd have done just well as well, or you've done well for yourself. But being exposed to single companies as well pushes the boundaries of of what you can really make in return. Now, another interesting one that we can add to this, let me do that. As you can see, just putting Bitcoin into the graph as well, we can see how this has performed. Bitcoin is up almost 800%, maybe a little bit closer to 900. And you can see how it's really done well over 5 years. Now, if I choose max on this graph, of course, you can see that the S&P 500 really, actually, Microsoft really takes the lead here in terms of its performance over, say, the lifetime of this company and the stocks itself. VTI about 285%, the S&P is about 2,000%, okay, and Bitcoin is up 11,000. So the point here is, let's just go back to something that's more realistic. The point here is, it is important to have a diversified portfolio. And like I said, real estate is also good to invest in, and hopefully we can reach that financial goals that we want to hit. Just wanted to share that with you. See you next one.